Hey guys, Trader Tim talking about price and volume. This is the second video, a little two-part series here. Um, so in the first video we talked about how price action can give you your entry setups and how you really don't need that many indicators or any indicators at all other than what we feel the market internals provide for us. And again, we have a 20-period exponential moving average on our charts. Up in front here, my just Infinity Futures trade platform. You can, if you want to get a copy of it, you can click the link on the right and download your free platform's free. Commissions are very cheap as well. So on the platform here, we have the bid quantity and the ask quantity, but it doesn't really tell us much about trading volume. So to that, we look at the this is the ES here, S&P E-mini. Look at the volume, or you can look at open interest, but we look at intraday volume here. And one of the things you want to look for in volume are, one, where is volume happening? Where are the large volume bars? In this case, this is yesterday, as February 4th. We see that a couple spikes here at the close. But if we go back a few days and we take a look at a day that's more range bound, for instance here, one of the things we can see, so this is February 2nd, we can see that on the open was quite choppy and we had a relatively equal volume price action here. Price action was moving sideways and the volume was again moving sideways. But as we began to move down these three bearish bars, volume really slumped off, which simply means less contracts were traded at this price level as the prices were moving down. Now as the prices began to move up, we began to see volume increase, as well as during the intraday portion from anywhere, this is Central Standard Time, from 11 to say 1, volume is almost non-existent in this area. So we can really identify that in the first about 2 hours or hour and a half in the morning, and then the last hour and a half or so at the end of the day, we see big surges in volume, which means more liquidity, quicker fills in the sense of if you're trading a larger size, there's more buyers if you're going short, more sellers if you're going long, versus in the intraday, or if you take a look at an overnight session, you'll see there's very low volume and very few contracts traded. So when we're looking at volume, we're looking for where is the volume heaviest and the pattern of the volume related to the price. So another good example would be, I suppose, here. So this is yesterday, the 4th. We see that we're moving down all day on relatively strong volume. And then the end of the day here, volume slumped off, obviously here during the lunch hour. About this is 2 o'clock Central Standard Time. We started to move lower, and volume started to increase. Now as we moved sideways here, the volume kind of pittered off, and then into the close we had a big surge of volume again. So in instances like this where price is declining but volume is increasing, we can typically look for that trend to continue. And the same token, if price is rising and volume is rising, that's confirming the rally. So take a look at some of your charts. Try to find the high node volume areas and see what price is doing and if the volume is validating the price. So if you do have questions, check out the blog tjmactrading.com. Go ahead and email us, and check out the YouTube site for more videos. So have a great day and happy trading.